Straight into the briefing. Obviously, the euro's been under some pretty aggressive selling pressure this morning as ECB President Mario Draghi, you probably see on the TV, still speaking, delivering his speech at the moment, but the text already came out about half an hour ago and triggered a pretty decent move to the downside. We'll have a look at the comments a bit more closely shortly, but I think going to tackle the kind of day from yesterday and go through things chronologically, and it'll kind of put all the pieces of the puzzles together, hopefully. So first of all, a quick look at the equity markets. You can see here that the DAX under some pressure this morning. Eurostoxx, other European indices following suit. So a test of S1 just happening at the moment in the DAX future as I'm speaking. So very much a continuation of the negative theme that developed following, as you can see, the biggest sell-off that we had in the US indices last night following the release of the FOMC minutes, which of course was at 7 o'clock. First of all, though, let's just have a quick look at the S&P yesterday, because it was a bit of an up and down day in respect to the beginning of the US session. We obviously had a very decent move to the upside, triggered, or the catalyst being that ADP employment change, and it was a bit of a kind of a mixed trading event in regard to the headline figure was roughly a 20k beat, 263,000. So the market kind of knee-jerked higher in response, i.e. US yields and the dollar. But then the revision came out, and the revision went from 298 to sharply lower to around a 50k revision. Then the market came back. But then on balance, when you actually look at the 3-month average of ADP, you're looking at numbers of 263, 245, 249, and we were looking at this at the time, and ultimately that really is an underlying a very healthy situation in terms of these numbers. Certainly the consistency, and to a level of kind of 250 on average, let's say, is kind of the best state that this data in particular has been in. And so what we saw in the charts then was over gradually a period of time, it kind of that view kind of baked in, the market started to rally in the US indices, and then Wall Street opened. We had another kind of wave of buying at the open that pushed prices higher. Obviously though, then some of the market movement tended to die down as people sat on the sidelines awaiting the FOMC minutes to see what they had to say, and obviously there was a bit of a focus on this balance sheet issue as to how now hawkish did the Fed become in regards to, aside from the rising of interest rates, they start to tighten the balance sheet, look to reduce their debt burden. And as you can see here, we had a pretty dramatic collapse in US indices, much bigger than the bid that was seen on the back of really the data in ADP. That was taken back pretty quick fashion within a space of an hour, and then we just continued to the downside before finding maybe just a touch of support, I guess, around if I put this on the 60-minute, from that low print that we had. This is right at the beginning of the week on Monday. We've kind of settled around those prices around the 23 kind of 40 level. So what exactly did the minutes from the Fed say? Most of the headlines kind of leaning on that balance sheet issue. Traders betting the Fed will slow rate hikes to shrink the balance sheet. So there's a bit of a mixed picture here in terms of the reaction, and the equity sell-off wasn't just about the minutes. So let me just give you a few of the highlights. So one of the key points of which specifically came from the minutes was a comment that, quote, some participants viewed equity prices as quite high relative to standard valuation measures. Whenever the Fed makes any kind of subtle hint to the stock market being overvalued, bang, the selling almost takes place immediately. It's highly or unusual, I'd say, for the Fed. They do it from time to time, to start talking the market kind of down like that, and so when they do, you tend to get quite a dramatic reaction, hence the kind of the movement that we had in the S&P and the other indices. Then the other kind of key area on this balance sheet issue was, quote, provided that the economy continued to perform about as expected, Most participants anticipated that gradual increases in the federal funds rate would continue and judged that a change to the committee's reinvestment policy would likely be appropriate later this year. So i.e. they're giving a timeline towards when this idea about the changing of the reinvestment policy, i.e. the rolling over, if you like, of the balance sheet, that will become a more sharp focus at the end of the year. So definitely this is the first kind of step towards the reduction of the balance sheet, and so equities not liking that either. Then you throw in the mix from the equity perspective that tax reforms will take longer to accomplish than the repeal and replacement of Obamacare. That was according to Ryan. So the US politician, obviously a senior Republican who locks horns with Trump more often than not, talking about the House and saying that the House has a plan, but the Senate doesn't quite have one as yet. And so even the three entities aren't on the same page as yet. Likely in reference then to the two dual chambers of Congress and the President. So again, this tax reform issue is obviously key, but Paul Ryan's suggesting that it will be even longer on the tax reform issue to accomplish than the repeal and replacement of Obamacare, which has obviously been a bit of a disaster for Trump thus far. And so all of these factors coming into play and then weighing heavily on this equity move to the downside. Now, the T-note reaction was a little bit different in that you had the initial move to the downside. You can see that wick where the initial kind of response looked like a slight pop in yields to the upside. This was likely probably in response to the fact that there was at least some measurement of time around this discussion on the reinvestment policy. However, once the equity move started to gather a real pace to the downside, and it was a pretty big sell-off, that then seems to have led to a recovery and a support for the US 10-year. That probably as well, and the fact that the Fed are talking about still this kind of gradual notion when it comes to policy. So that probably as well just soothing some of that concern. But really it was the equity move for the additional reasons of the Fed specifically calling out the overvaluation of the US equity market in combination with those downbeat comments from Paul Ryan on the tax reform. That's why that move is much more evident in US equities. A quick look at the balance sheet issue. I know we talked about this briefly yesterday, and I have sent out some research, so please do take a read, because this really is the kind of thing that most people are talking about. And this is all about obviously going through the financial crisis where the balance sheet of the Fed ballooned to quite phenomenal size. Actually, it's at $4.2 trillion at the end of March of 2017. This is a combination of MBS, mortgage-backed securities, and treasuries. What the Fed are basically intending to do, and if you remember, we looked at that chart yesterday, which had all of the debt in which the Fed hold, and like any bond, there's a maturity date, and what the Fed are looking at is about this reinvestment policy, i.e. so far generally what has happened is when these bonds, or the Fed reinvests the principal from bonds that mature back into the market, so it keeps it rolling, if you like. And this talk that's ongoing at the moment is about stopping the reinvestment, and that means then that this is a form of tightening in some respects. So this is why the market is getting a little bit not concerned, but raising a few eyebrows as to how the Fed are going to communicate this. And timing is obviously key, because we're in the very infancy of a rate hiking cycle, and if all things being well and following the Fed projections, we're looking at least another 2 interest rate hikes this year. So what's key to look out for from Fed commentary going forward is when Fed speakers talk, how many rate hikes do they see for the year, and also at what point do they see then this conversation about the balance sheet coming in. To what point do interest rates need to be? Is it a case that they need to get interest rates up to a certain level before that can take place, or can both things happen simultaneously? Will be one of the key factors. So have a look at this article. I did send this out to you from the FT today. It's quite a good, just simple explainer of some of the key risks going on. But this is really the key factor here. What are the risks? So investors warn that the Fed reduces the balance sheet too quickly. It could jolt interest rates higher as the market struggles to digest new supply of bonds. So i.e. said the Fed picking them up, you've got to rely on the market now stepping in without that reinvestment of just repurchasing the old expiring debt. So it would definitely be a test for the market when that time actually comes. Okay, a quick look then at the market this morning, and as you can see, you've had a pretty decent sell-off in the euro currency. Let's just take a look on the 15-minute. So ECB President Draghi spoke, or is still going, but he initially began his speech at 8 o'clock this morning. Now, this is a perfect example of preparation. You remember yesterday, in this very briefing, we were talking about the fact that there's 9 ECB speakers speaking from Thursday, commencing with Draghi at 8 o'clock, going through Thursday and Friday. By that then, you know exactly that if I'm a euro trader or am I trading European assets, I need to be in the hot seat, ready to go from 8 o'clock, listening out for Draghi. The fact as well that Draghi is speaking at the ECB Watchers Conference, this is the basically Watchers Conference is when all the kind of political, well not political, the journalistic crowd gather, and it's for him to deliver his latest insight on what he deems as on the economic environment and therefore net for monetary policy, so you know there's going to be relevant comments. The thing that I do as well in preparation is I'll look for, is there going to be an initial release of text? So let me just quickly show you how my preparation went this morning. First thing I did when I got in, I went to the ECB website. I then go to media here, click on media. I then go immediately to the weekly schedule on the right hand side, click on that. I can then access the full weekly schedule of public speaking engagements from all of the ECB members. What I do, this goes back to last week, so I scroll through to Thursday. Here we are, we're at Mario Draghi. I confirm the exact topic that he's speaking on, but most importantly, and the key point here is this bit here. The text will be made available on the ECB's website. And for those who are looking at the chat room or following me on Twitter, obviously I had that link for the full entire speech 1 second after he had spoken. Bloomberg actually didn't have that embargoed. They too, what Bloomberg would have been doing is exactly what I was doing. They would have been waiting for it. What happens then? I know this is going to be released on the ECB website. I then go back to the home page, and the moment we struck 8 o'clock, I was hitting F5 on my keyboard. I then see this speech section bubble with a 1. I hit that, and there it was, the full Draghi speech in its entirety. And so while Bloomberg are doing exactly the same thing, they've got the speech, they're looking through it to pick out key comments, I can do the same. And just out of my year's experience, I'm not a journalist, I'm an analyst. It's my job to know the ECB kind of policy stance and key comments and words that might look out of line. And actually, if more experienced guys, you could actually pick out the comments quicker than you would have got them from the newswire, and you would have been able to action that trade faster, granted if you had the conviction and confidence of the understanding of ECB policy well enough. Whenever you have these scripts, generally what I try to do is I approach it in 2 different ways. One, I think about what are the key things that the market really is concerned about with ECB policy at the moment. So let's say inflation is really key to ECB policy thinking. What I'll do is I'll go do a Control F, I'll type inflation like that, and actually I can see inflation appears 39 times in this document. So it's a pretty lengthy speech, but then what I'll do is I'll quickly scan through wherever it says inflation to quickly look at the type of sentences that are constructed around these key words, if that makes sense. Because what I'm looking for is, how does he view inflation? Is he concerned or is he happy to let inflation kind of, run its course? That will tell me hawkish or dovish. So that's one way I would do it. You can search keywords to quickly speed read through these lengthy speeches. The other thing that I do is I quickly scan as to what are the titles. So monetary policy is working. That, to me, I would read that subtitle and I would go, this isn't an important section for me. Monetary policy is working. This is probably him just talking about how well the economy is doing, optimistic kind of tone about the ECB central banking techniques and so on. Quickly scan down. Recovery is progressing and gaining momentum. Pretty much tells you what the exact, that summary for me. So I'll skim down. Inflation dynamics depend on continued policy support. Now this is interesting because even that headline is dovish. Inflation dynamics depend on continued policy support. So when you start reading through this section, it starts to get a lot more interesting because that's the key point of policy. Monetary policy stance is still appropriate. So again, it's sticking to the script. There's not any subtle hint towards moving hawkish. And then, of course, actually, if you were going to do this really quick, you would skip the whole entire text, go immediately to the conclusion, because ultimately the conclusion should be concise, sharp, to the point, and the most important, overall context of the speech. That's the purpose of a conclusion. And when you read the conclusion, we're confident that our policy is working. The outlook for the economy is gradually improving. Okay, fine. As a result, the forces that are currently weighing on domestic price pressures should continue to wane. So this is quite an optimistic kind of upbeat comment, but not too dissimilar from what the general assessment of what the ECB have said before. But even so, we have not yet seen sufficient evidence to materially alter our assessment of the inflation outlook. So that's a dovish statement, which remains conditional on a very substantial degree of monetary accommodation. So again, maintaining a dovish stance. Hence, a reassessment of the current monetary policy stance is not warranted at this stage. Therefore, net, we're not close then to policy changes. So the ECB is remaining in an accommodative stance. Before making any alterations on the components of their stance, rates, QE, forward guidance, we need to build a sufficient confidence that inflation will indeed converge with our aim on the midterm horizon and will remain there even in the less supportive monetary policy conditions. So, at probably, I would say, if you were being really quick, about 15 seconds past 8 o'clock, if you would have read that, for me, that's a pretty clear assessment of it being the status quo, no hawkish element, if anything, still erring on a dovish side. And then this comes in the context of the Fed talking about the balance sheet. The balance sheet, just the talk of it, is a slightly more leaning hawkish conversation in some respects. Therefore, you've got a divergence of central banking policy, both of which equate to a negative euro-dollar price action, i.e. euro weakness, dollar strength. The dollar has strengthened this morning since 8 o'clock, predominantly off the euro weakness. Then you start to get quite a decent move. If you look at the actual rate of movement that the euro took, if we look at it on a minute chart, this is where Draghi started speaking. I'm saying that if you're pretty quick and hot on your ECB policy, within 1 minute, give yourself some time, within 1 minute, let me just show you the screen. In a 1 minute period, you should have had a pretty clear assessment of what that speech from Draghi was like. Don't forget, he's not even spoken as yet. He's not even taken the stage because the comments have already come out on the ECB website. Then, you're already short at that point. Bloomberg start plucking out the headlines. I mean, they are slow at doing it when they do it manually because these guys are journalists. They're not analysts. They're not particularly hot at being very quick at these things. And so then the market goes, then more comments come down Bloomberg, people start, then technically you break the low seen earlier in the morning, pivot gives way, the 107 handle also at the same time, the selling picks up some pace, this idea continues, he starts talking, he ratifies the dovish stance of the speech you've already heard, then you keep going lower, the target probably on that break would have been the S1 level. But you can see, if you follow this way of thinking, And this is all preparation and then execution of the way of just trying to obtain the news. I think that could have been a pretty decent trade if tackled in the right way, in terms of ascertaining the news flow. Obviously, the Squawk should be doing that, and obviously I'm there to help. But I wanted to just quickly talk through the process of how I operate in order to capture that news quicker than the traditional news wires, where I think in an instance like that you can definitely get an advantage. Okay, moving on, I want to have a quick look at a couple of other press headlines, because I know we've just talked for quite a while on that issue. So this is one of the things I want you guys to be aware of going forward through today and tomorrow. So this is Xi Jinping and Donald Trump. So they're going to be speaking over the next 2 days, and this is really a key meeting because you've had Donald Trump meet with Theresa May, you've had Trump meet with the Japanese PM Shinzo Abe, and now you're going to have him meeting the highest ranking officials from China, which arguably is one of the most important relationships which Trump will need to manage during his presidency. Key issues then to look out for, obviously North Korea. We looked at this at the beginning of the week, given over the weekend that test launch of a missile by North Korea in the Korean Peninsula, obviously heightening tensions in those highly contested waters. So how much pressure Trump will put on China to take action to kind of quell that situation will be interesting. Taiwan is a very hot topic. Not sure how familiar you are with your geopolitics on that particular region, but Trump has upset a lot of people in China because he has broken 4 decades of precedent, because back at the end of last year he spoke directly to the Taiwanese president. Now that might not sound like a lot, but that's actually a really big deal, because in China there's this policy known as One China. That means that the sovereignty of Taiwan, as far as China are concerned, is from Beijing. And so if the US want to talk to Taiwan, they need to talk to Beijing, not Taiwan. And by going directly to the Taiwanese president is like literally flicking dirt into Chinese officials' face as far as the political makeup on that particular geopolitical area. Now, this also goes into a key area of the South China Sea. You might have read about this a lot. This is really important. For those who are not completely au fait with the geography of that particular area, this is what we're looking at. And you can see the key kind of regions here, and the one in particular is the East China Sea, which is the most hotly contested. Here you have Japan on the right-hand side. There you have the Korean Peninsula, i.e. North Korea and Pyongyang at the top. And you've got China on the left-hand side. You'd be looking at Hong Kong would be the most southern, but Taiwan is obviously off the southeast coast, very close proximity to China. Now, the waters that get contested in the East China Sea are very important, because if I was to look, so this island cluster here that I'm looking at there, that is Okinawa. When Okinawa is one of the bigger bases here, it's Japanese sovereignty, but Okinawa also has US Air Force bases, ships, ports, and so on. So actually, what you have here is that China want to passage. They need to go through these waters to go into the Pacific, but obviously they need to go through Japan and US bases. This is why this often gets very heated in this particular area. Taiwan as well being close proximity. One of the key things here from a political point of view is that Xi Jinping and his party, it's not just about the economic performance, it's about One China is one of the biggest political kind of drives of the party in China. So that's a really interesting thing to watch. How much does Trump start jumping in and start talking about that particular issue will be important. The other key topics, obviously trade and investment. Trump, if he's to have any type of longevity in a relationship with one of the biggest debt holders of or US debt or T-notes and treasuries. He's going to have China on side, and from a global demand point of view, they're obviously very important. Now, one of the big things here is about currency manipulation. If you remember, just last week, Trump was saying some pretty strong words about China. He has done before several months ago about China being a currency manipulator. Actually, in fact, Trump in his campaign was very explicit that from day one he would call China a currency manipulator. I would be very surprised if he says that face to face to Xi Jinping in a meeting, because that will not go down very well, to say it most mildly. Actually, a inside advisor has already been covered on Bloomberg as saying he's not going to say it, not at least in the meetings directly. Now, this is all part of the jousting that goes on ahead of big high-level political meetings, particularly when two parties have yet to meet for the first time. So definitely, if Trump starts to grab his mobile phone and start firing off some tweets after just exiting a meeting with Xi Jinping, and it starts to talk about currency manipulation, i.e. going down this route of US protectionism, that is probably going to translate into a negative read across, i.e. shorting US equities and the US dollar on the back of I'm trying to think of a phrase without swearing, but it's like, you're basically the main player that you need to have a very strong relationship with. You're not getting that off to the right footing at the beginning. So that's definitely a key meeting. It's ongoing over the next 2 days that you need to be wary of. Okay, a few other headlines. Theresa May softens stance on Brexit roadblocks. I thought I would cover this just briefly, specifically for Sam North. Basically, Theresa May has begun to dismantle roadblocks to a Brexit deal, including accepting the possible extension of free movement. So again, it's quite surprising, and maybe just because of Trump and China and all these other things that are going on, now that Article 50 has been triggered, Brexit seems to have taken a bit of a backseat in the press agenda. But what's happening definitely is that Theresa May isn't stupid. As we've discussed here before, she knows full well that she needs this transitional agreement to go through. So this hard Brexit has already started to fall away. And we're talking about the free movement of citizens beyond the end of 2019 2-year deadline, which I thought we were told was part of the hard Brexit and the government on the immigration issue. But obviously, the goalposts are already moving, the compromises are already starting to be made as these agreements start to get underway. The key issue here, really, from a political point of view, I guess in the longer term, is more to do, I think, with I expect her to compromise in order to get this deal done and have EU authorise the extension of talks. This is absolutely critical to the future of the UK beyond this 2-year horizon. The one problem that this will obviously incur is that people who have thoroughly believed in Theresa May and her remit of hard Brexit, what you will see is that this hard Brexit stance will gradually decrease in its severity to the point where Brexit might become a soft Brexit. And at that point, what happens to Theresa May? In terms of her popularity at present, obviously very strong, maybe due to the weakness in the opposition, but obviously she is fulfilling her mandate and she's really driven home that point of hard Brexit. The problem that she might encounter over the coming 2-year period is that in order to get the transitional agreement and strong or better trade talks going or ongoing, she will then need to make quite large concessions, which will be to the detriment of her political popularity, which then creates political uncertainty. So her fate is going to be interesting, definitely in the longer term. Probably I'm talking more like the next 12 to 24 months. Other things just quickly from overnight, you did have some Chinese service data. Growth softened in Q1. The market's not really been too concerned about this. The bigger, broader picture is driven from Draghi this morning and the minutes from last night. And then you've had German factory orders also come out early this morning at the Eurex Open. Again, factory orders in Germany tends to be one of the most volatile data releases. If you're looking at the last 3 months alone, you've gone from positive 6% to negative 6.5% to positive 3.5%. And so the market tends to kind of just push the data to the side, even though it's a fairly significant bellwether reading for the German industry. The fact that it's so volatile, very hard to take much from those types of statistics. Okay, quick look at the calendar then, just to wrap things up. And overall, in terms of scheduled economic data, it's actually pretty quiet. This morning, there really is nothing. The one kind of trade opportunity that you had, arguably, has gone. And actually, that's a really important point for the newer guys. And I'll repeat it. Possibly the one trade opportunity of the morning has gone. And so if you've missed it, you've missed it. Be comfortable with the fact that that moment has come and it's gone. That does not mean that you start jumping in the market thinking, there's been some decent moves this morning. There is nothing scheduled now for the rest of the morning. After a big move, what tends to happen is the market then hits that move, and then the trade is done, and people then sit on the sidelines waiting for the next opportunity to arise. The experienced trader will have discipline to pick and choose the moments to want to enter the market, and that moment has gone. Now possibly you might need to wait a few hours until the US come in to then see how the landscape looks at that particular point in time when we get to midday kind of London time. Throughout the morning though, you have got some ECB speakers. We've had Draghi and Pratt. You're looking out for Constancio this afternoon. Constancio sits as a more higher senior ranking official on the governing council, so Constancio will also be important. Okay guys, that's your briefing for this morning. Going to wrap it up with that. So have a good day, and I'll see you in the chat room. Thank you.